Welcome to this explainer. If you follow SoCal real estate, you know it's basically a landscape of shifting sands right now. But every so often, one deal just cuts right through the noise and perfectly captures exactly what's happening on the ground. Today, we're unpacking a single, highly specific transaction that completely redefines our understanding of the South Los Angeles market. Okay, let's just dive right in. 6.79%. That is our capitalization rate here. And man, that number immediately raises some eyebrows. In a broader Los Angeles market where investors historically accepted, sub 4% yields just for the privilege of owning the dirt, nearly 7% is a massive flashing beacon. It tells us the buyer priorities are shifting, and they are shifting dramatically. And here is the actual concrete reality behind that abstract number. It's a functioning 20-unit building at 1101 West 45th Street, right in the 937 zip code of historic South Central. Look, this isn't some glossy, speculative rendering. It's a real asset that just traded hands, and it's setting a brand new benchmark for what capital is actually looking for in today's climate. Section 1. The deal at 1101 West 45th. All right, looking at the financials, that $2.8 million price tag and the 8.84 gross rent multiplier, which is just the ratio of the price to its gross annual income, they lock in that remarkably high yield. At $140,000 per door, this basis, or total initial cost per unit, is incredibly attractive, especially when you contrast it with the broader, often overpriced South LA market averages. The numbers here aren't based on what the building could be in 5 years. They represent exactly what the building is today. So, digging a bit deeper into the asset itself, we're looking at 20 total units, heavily weighted towards studios, along with a few one-bedroom configurations. And this isn't a coincidence. Think about what that actually means for a second. This unit mix caters perfectly to the evolving renter demographic in this specific submarket, people who are demanding efficient housing, but without the premium price tags you'd see for larger layouts in core neighborhoods. Section 2. Decoding the cap rate. We are seeing a really stark strategy pivot out there. Investors are moving aggressively away from the old dream of speculative long-term appreciation models. Today, it's all about a pragmatic, laser focus on immediate cash flow. You can no longer bank on the broader market just bailing out a bad buy through endless appreciation. You literally need the building to pay for itself from day one. And that brings us to the harsh reality of modern real estate finance. When interest rates are this elevated, your going-in yield, the actual return you're making on day one, isn't just a nice bonus anymore. It is absolutely critical to satisfy your lenders. They aren't funding pipe dreams right now. That 6.79% cap rate at 1101 West 45th ensures the math actually works against today's cost of capital. Section 3. Heavy lift to light touch. The broader market right now is experiencing what industry insiders are basically calling value-add exhaustion. For the last decade, the classic LA playbook was buy an old building, gut it, spend a fortune on capital expenditures, and then jack up the rents. But with rising construction costs and strict regulations, that's become incredibly difficult. Now investors are actively stepping away from those massive heavy lift renovations in favor of as-is or light touch strategies. Now, at that $140,000 per door metric we talked about, sure, there might still be some meat on the bone for future rent increases. But the true beauty of this deal, the buyer doesn't have to do a massive renovation to make the math work today. The asset is already operating efficiently enough to justify that nearly 7% return exactly as it is. Section 4, the South LA shift. So why here? Well, the demographic drivers in the 937 zip code are incredibly compelling. Driven by major anchors like USC and the Bank of California Stadium, this corridor is capturing steady organic growth. It's pulling in investors who have been completely priced out of traditional core neighborhoods like Koreatown and Hollywood. They're chasing yield, and they're finding it right here. And this is where we really contrast this specific transaction against the broader South LA market dynamics. Historically, the broader South LA area was kind of unfairly painted as a risky, speculative, heavy lift market. But this specific deal at 1101 West 45th stands in sharp contrast to that old narrative. It proves the region is fundamentally re-rating into a resilient, yield-focused organic growth corridor. It's a total paradigm shift in how capital views the stability of this submarket. Section 5, Navigating LA Regulations. Of course, you literally cannot analyze LA real estate without talking about the strict regulatory landscape. Navigating LA's Rent Stabilization Ordinance, the RSO, forces modern operators to be highly surgical. You simply cannot operate with a blunt instrument anymore when rent increases are strictly capped. The regulations require deep knowledge, immense patience, and serious operational efficiency to maintain profitability. This strict regulatory reality basically confirms that those aggressive, frankly disruptive, buy and flush tenant tactics we saw in previous market cycles, yeah, they are no longer a viable playbook. The era of buying a building and aggressively clearing out tenants to double the rent is effectively over. Today's investors have to work with the existing tenant base, which is exactly why prioritizing an asset with strong existing cash flow is so incredibly vital. So, what should you actually take away from this whole explainer? It's that for sub $5 million assets across the region, proven collections and stability are now officially triumphing over speculative projections. The resilience of South LA is unshaken against broader market volatility, but it demands strict regulatory awareness. If you have the operational chops and you prioritize yield, capital is still very much active and eager to deploy. This single transaction at 1101 West 45th Street sets a crystal clear benchmark for the current market. And honestly, it leaves us with a critical, undeniable question. As we transition away from heavy lift renovations and those big speculative dreams, is the era of massive LA real estate speculation completely over? And if so, where exactly will this yield-hungry, pragmatic capital deploy next?